welcome to those in this lovely auditorium and those watching online around the world to the third panel of our conference on Southeast Asia, regional dynamics and international linkages. And this panel will focus on economic development opportunities and challenges. I'm Jay Rosengard. I teach public finance and financial sector development at the Harvard Kennedy School, HKS. I'm also director of the HKS Indonesia Public Policy Program and the Asia Center Thai Studies Program. And I am thrilled and honored to be joined by three world-renowned experts on Southeast Asia economic development. I'm going to get them to blush. So starting the first on my right, Gita Wirjawan is former Indonesian Minister of Trade and chair of the Investment Coordinating Board. And he's really, truly a Renaissance man. He's an ex-investment banker. He's a serial entrepreneur. He's a music and film producer, a jazz musician himself, badminton and golf enthusiast, and host of Endgame, Indonesia's most popular business podcast. Gita is also founder and chairman of the Ancora Group and Ancora Foundation, and is currently a visiting scholar at Stanford University's Precourt Institute for Energy. But most importantly, Gita earned a master's degree in public administration from HKS as a Mason Fellow in 2000. So welcome back to Harvard.
Thank you.
Next, we have Chryslert Sampantarak, who is professor of economics and public policy and interim director of the International Studies Program at the University of California, San Diego, UCSD. He is also an advisor to both the Bank of Thailand's Pui Ungpakon Institute for Economic Research and the Stock Exchange of Thailand. Chris is an expert in finance, public policy, and economic development, focusing on households and firms in emerging economies. I'm a little bit envious because he is a prolific writer. Recent publications include studies of risk and return in village economies, impacts of natural disasters on farmers, ethnic segregation and public goods provision, in this case, evidence from Indonesia, if I'm not mistaken, and the life cycle of household debt. I cannot list all of Chris's insightful research, or we wouldn't have time for a panel, but it's imperative I mention his most recent book manuscript on comparative economic development in Southeast Asia economies. And then, last but not least, we have Meg Rithmeyer, who is James E. Robeson Professor of Business Administration in the Business, Government, and International Economy Unit of that little-known business school across the river. So Meg, I thank you for emerging from the darkness of HBS into the enlightenment of Harvard Kennedy School and the Faculty of Arts and Sciences. Meg's primary expertise is in the comparative political economy of development in China and Southeast Asia. Her first two books focused on China. One was Land Bargains and Chinese Capitalism, The Politics of Property Rights Under Reform. The other book, The State and Capitalism in China. Her most recent book has a more comparative perspective, Precarious Ties, Business and the State in Authoritarian Asia, examining state-business relations in Malaysia, Suharto's Indonesia, and the People's Republic of China. Perhaps your second edition could include Prabowo's Indonesia? No need to respond, yes. Meg is now working on a new project about business, geopolitical risk, and resilience. So I'm truly humbled to moderate a discussion with such accomplished panelists. So rather than have a series of formal presentations, we will engage in a more free-flowing, spontaneous conversation, first among the panelists and then with our audience in a Q&A session. And please allow me to start by setting the context just a bit. A few years ago, I presented a paper in Japan on whether Asian middle-income countries, particularly those in Southeast Asia, which I called kittens, the Asian kittens, could catch up with the Asian tiger countries like Singapore, Hong Kong, Taiwan, and South Korea. That is, could they escape the so-called middle income trap and get rich before they get old. With this quandary in mind, I'll begin with Gita. So, although Indonesia has been growing at a respectable rate, annual rate of about 5% for the past 2 decades, it will have to do so much better to escape the so-called middle income trap. Current President Prabowo thinks he can increase the growth rate to 8% per year. Do you think this is possible, given the current structure of the Indonesian economy and the context of growing income and wealth inequality in Indonesia? In other words, what do you think are the main obstacles for Indonesia to achieve robust, sustainable, and inclusive growth?
Okay, that's a mouthful. But let me first start out by thanking Jay and Harvard University for inviting me to be here. It's always an honor for me to sit next to Jay. I think it's important to understand that, we have a leadership who spent his early years in international domains, where he was educated in the UK and some parts of Europe, and later on for military training purposes in the US. He speaks Dutch, German, French, and English, and of course Bahasa, Javanese, and Manadonese. So the presumption is that his personality is thick with internationalism. Right? Sometimes he cusses in German or English or what. That internationalism, I think, is going to dovetail into something that could turn out net positively for Indonesia. At the rate that, if you take a look at the monetary space of Indonesia, it's manifested in the ratio of money supply to GDP of only about 45%. For context, Singapore is at 211%, right? Singapore is flushed with liquidity. Yes, 6 million people, but about a $500 billion GDP. Indonesia is at about $1.4 trillion. From a fiscal standpoint, it's also structurally limited at the rate that the tax ratio, which is the ratio of the tax revenues with the GDP, is only around 10%. It used to be 15.5%. It's dwindled to about 9.5%. It's spiked up a bit to about 10%. Whereas in OECD countries at 33%. So monetarily, fiscally, it's limited. So the only way out for job creation purposes or for liquidity creation purposes is to attract foreign direct investment or capital formation from overseas. Now you put that in the context of the FDI that comes into Southeast Asia on a yearly basis, which is about $200 billion per year, of which Singapore has been religiously getting about 100 to 140 billion every year, as compared to Thailand, Vietnam, Malaysia, Vietnam at a rate of 10 to 20, Indonesia 25 to 31 billion each year for the last 10 years at least. So it speaks of, I think, the structural limitation of Indonesia in terms of its pre-existing monetary and fiscal circumstances, but also its pre-existing ability to attract money from overseas. Now, whether or not it can attain an 8% growth rate of on a per year basis, we're essentially talking about a delta of 3% beyond the baseline of 5%, right? 3% in the context of a GDP of about $1.4, $1.5 trillion is really just about $40 billion, right? Now, if the FDI has been about 25 to 31 billion, and Singapore has been at 100 to 140 on a yearly basis, I'd like to think that it's not mathematically impossible for a country that's slightly larger than Singapore to be able to get more than 31 billion. Now, why does Singapore attract so much more capital? It's not because of ideology. It's not because of its proximity to the Malacca Straits. It's not because it has a lot of bauxite, nickel, coal or natural resources, it's simply because of the enforceability of rules and regulations. People put money in places where they have an ability to interpret the pre-existing regulatory framework in ways that are not going to be shackled or disrupted by the pre-existing legal apparatus. So if Prabowo were serious about attaining 8%, he can ignore the letter C, the letter G, the letter X, the letter M within the economic formulation. He just needs to focus on the letter I. And if he can get $70 to $80 billion, he's home. He's got that 8%. So I think the way to measure whether or not he's going to be able to achieve 8% is the degree to which he's going to be serious with respect to the rule of law. And I think it's too early to tell. It's only been a little over 3 months. But in my view, he's done some repermutations in a net positive way. We might be seeing some element of chaos, but I think a good chunk of that is correlated with what might be happening in the US from a capital market standpoint. But we're seeing the unravelings of, I think, bad behaviors in a disproportionately much more magnitude than whatever we've seen in the last few years. Now, going forward, he needs to basically take advantage of his internationalist posturing, right? Within a few weeks, he got on a plane, he went to Beijing, Washington, Peru, Brazil, London, Abu Dhabi, Indonesia, then off to Malaysia, solely on a mission of basically promoting Indonesia as a destination for capital formation. Now, I'm in the camp that believes that capital formation or economic capital formation is not an exercise of absolutism. It's more an exercise of directionality. If the investor believes that the destination is going to be better tomorrow than today, 2 days from today better than tomorrow, a week from today better than 2 days from today, I think there's hope. And to the extent he exercises this mandate with dogged, steadfast focus on internationalism and rule of law, I think we might be able to achieve it.
A quick follow-up question. So, and it would support your perspective. My understanding is that the problem isn't shortage of capital. In fact, there are outward flows of capital from Indonesia's investing in other countries in the region because they see a better return for whatever reason. So the idea of enforceability of contracts, predictability, continuity of policy, I would agree if you're looking at the primary constraints to attracting FDI. But another consideration is perhaps unfair competition because of a strain of economic nationalism that kind of comes and goes in Indonesia. Do you think this is a factor or not?
I'm a lot less worried about economic nationalism. I'm a lot less worried about protectionism. I'm much more worried about rule of law. I would argue that Singapore is actually a lot more protectionist in the telecommunications sector than Indonesia is. We allow foreign investors to invest up to 100% of the telco sector. Singapore limits international ownership, but Singapore has been able to attract much more massively than any other country in Indonesia because of that predictability, if not certainty. So I think the episodes of the closures or closing of some of these textile companies in the last few weeks, involving more than 15,000 workers, are actually predated. It's a legacy of what has not been addressed previously. It's just an accumulation that manifested in something that had to be dealt with in a much more decisive manner. I'm talking about the forward way, right? Not to mention the forward party here, but the forward way for Indonesia. I'm his ambassador of goodwill. But the forward vector for Indonesia, if not Southeast Asia, is to really take a hard look at the PISA, right? I mean, only 2 countries surpassed the global average of 488. Those are Singapore and Vietnam. Vietnam was still in the bushes until 1975. The Vietnamese, they're so passionate about beating the crap out of the Chinese, not the Singaporeans, right? And this is historical. It goes back 2,000 years. They would mortgage their house so that their daughters and kids, sons would go to school. That's the Vietnamese thinking. And it's manifested in how they've been able to surpass the global average in PISA. And if you go to South Korea, the highest number of foreign students in Korea is no longer the Chinese. It's the Vietnamese. That's how much focus they have on both non-tertiary and tertiary education, right? And if you take a look at the number of publications coming out of Vietnam or Vietnamese universities and Vietnamese students all across, I think it outnumbers, the Thais, the Filipinos, the Malaysian, and the Indonesians, not the Singaporeans. So that's the educational part. So you've got PISA, and Indonesia's average IQ is 78.49. Singapore is at 115. Most Southeast Asian countries' IQs are below 95, right? So if I were an investor, I would look at the degree to which the leadership of the municipality, the regency, the provinces, and the federal government or the center, if they would proactively take a view on increasing some of these metrics, right? And then lastly, cultivate the storytelling capabilities. I always tell the story that if you're in Washington, Sydney, Beijing, London, or anywhere you want to know something about Southeast Asia, you typically call the Singaporean High Commissioner. You don't call the Indonesian, Bruneian, Thai, Filipino ambassadors. Why is that? Because of the presupposition that the Singaporean is smart. The Singaporean is well educated. The Singaporean can tell stories. So I tell my Southeast Asian friends, dude, just get your IQ up, get your PISA score up, know how to tell a good story, right? And then lastly, rule of law. So if you've got all these figured out that entail some sort of positive directionality, I think we should be able to get more than $140 billion, what Singapore has been able to get on a yearly basis. And I say this with optimism on the back of my cognizance of the fact that the M2 that lies within the G7 countries is well in excess of $100 trillion. $100 trillion. That's almost 100 times the GDP of Indonesia, right? And we only need just a little bit more than $200 billion a year. So on the back of this hopefully continuing declination of interest rate by the Fed and its allies or friends, there needs to be a reallocation of economic capital on a risk-adjusted basis, of course. And I do believe that Southeast Asia could serve as a pretty attractive destination if those 4 attributes are addressed.
Yeah, I mean, internationally, there's clearly an excess of global capital looking for good investments with good returns. And you said just a little piece of a big pie would go a long way. So taking advantage of President Prabowo's internationalism or outward-looking focus, rule of law, and investment in human capital would be the formula. So over to Thailand, and it's the same question. What are the main obstacles to achieving robust, sustainable, and inclusive growth? Like Indonesia, Thailand appears to be punching well below its weight. That is, over the past decade at least, Thailand has not been able to take advantage of its tremendous growth potential. Moreover, in Thailand, income and wealth inequality is very high, among the worst in the world and getting worse. So in that context, maybe you have some magic sauce or some suggestions on how Thailand could address what you consider the major obstacles to increased and more equitable growth.
Okay, thank you, Jay, for this question. And actually, there are a lot of questions within this question. So I will try to to point out some of the points, and if I omit something, you can come back to me.
I do this because I have such faith in our esteemed panelists.
So if we look at economic growth in Thailand, right, in the past 50, 60 years, and as you mentioned that the country used to grow like much higher than this. It used to grow at like 2-digit rate at some point, and then late 80s, 90s, still like very respectable, 8%, 7%, that's normal. And then after Asian financial crisis, it dropped to 5, and now it's 2. It's good if we can get up to 3 or 3 something. I think that's kind of like shocking when you look at the trajectory, and the trend doesn't look good either, right? So if we want to understand like what's the problem, right? So the problem, of course, at the end is structural. So this is we have to recognize first that the problem in Thailand is structural problem. So once it's structural problem, of course, it's not to be solved by short-term policy, right? Like physical stimulus or even monetary policies. Those are not going to solve the root cause of the structural problem. Yeah. So if we want to dig deeper on what's the problem, what's the structural problem, I think one conclusion, just one word, is no productivity growth. Okay, so I think that's the conclusion, and whatever I'm going to talk from this minute on through the end is going to come down to no productivity growth. And of course, like if we want to understand the growth of the Thai economy during what we used to call like miracle period, and looking back is not that miracle anymore, right? So I try to reserve that term and not to use it too often, but during the 70s, the 80s, up to early 1990s, there are a lot of factors that feed into the growth. A lot of textbooks, a lot of articles talk about that. But I think one thing that I would like to point out, and I think people haven't spelled it out, even though sometimes they say it in the background, is that Thailand was fortunate. So it was luck. Luck was a big thing during that time. Okay, Thailand has been always in recent history open economy. It's small open economy, located like what we saw earlier in today's conference in morning, that located in the region where it's kind of like the trade route, right? So your small open economy in this strategic location, that has been factor that impact Thailand quite a lot. But in the past 50 years, during the high growth periods, if I have to pin down important factors that feed into Thai growth, of course, I'm not going to undermine the ability of the bureaucrats and policymakers during that time. They did fantastic job in doing a lot of things, but behind the scene that allowed them to introduce all of the development policies were global events. And Thailand turned out to be quite fortunate, being at the right time, at the right place for 3 decades, during 2 big events in global geopolitics. The first one was the Cold War, okay, which turned out to be hot war in Southeast Asia, right? And during that time, that was when in Thai economic history, they call it the American era. So the development during that time was a lot of investment from the US during the Vietnam War, and that's in the 60s, the 70s. So that fed into rural development and so on. Of course, Thai policymakers, bureaucrats, they're very good in like channeling and devising the policy that take benefit of that. Another event that benefit Thailand in the past 50 years turned to be the rise of Japan, right? And that led to the imbalance of global trade. And at the end led to the Plaza Accord and the flow of investment to Thailand in the late 1980s and early 1980s. And that drove the investment in Thailand during that time, right? So when you look at this, growth in Thailand during the high growth turned out to be something driven by the global factor, and Thai policymaker, Thai entrepreneur, Thai business people ride that wave, right? Very well, right? Fast forward Now we are not living in that world anymore. Geopolitical shift into something that is not the same as before, right? So right now, investment from Japan is not as great as before. And when you look at the US pool of investment in Thailand, a lot of capital flow stopped after the end of Vietnam War. But after that, then Japan went in, right? So it's kind of like continuation. But now we are in the global landscape that money doesn't flow to Thailand anymore. And why is that? Because geopolitics change. Okay, if you ask me why money flowed to Thailand during the 80s after Prasad Court, of course, like Thai policymaker tried to court like investor from Japan and so on. But was Thailand the best location to invest? Right? It was the best location to invest during that time because the country had stable politics, right? Neighboring countries like Vietnam, they were like fighting, of course, like that's not good. That's why the money from Japan and other countries in Northeast Asia, in East Asia, flow to Thailand, Indonesia, Malaysia, for example. But right now, it's not, right? Right now, Vietnam, right? We mentioned about that. Vietnam is quite stable politically, right? Location-wise, and this is something that might be paradoxical, but I think it's something that people usually forget about that. People used to think that Thailand has long coastline, but in economic sense, Thailand is landlocked. Because the long coastline that Thailand has is the Gulf of Thailand. And it's not, why I call it's in economic sense, because the coastline of Thailand is not on the trading, the shipping route, right? So yes, in the 80s, in the early 1990s, Thailand was good as a base for supply chain in the region because somewhere else was not as good. Somewhere else is now better. And Thailand is actually landlocked in economic sense. Why would you want to set up a factory in the land that is not in the shipping routes, right? So there has to be something else that compensate for that, right? So far, that's something else. It's not obvious, unfortunately. Okay, so I think that's the part that I want to continue from Gita because you talk about investment and so on, right? So again, at the end, productivity was not growing or improved as much in the past several years, several decades, even. Growth has been driven by investment, right? That was fed by something that happened in the world, and Thailand rode that wave quite well. But that's something else happened in the world. Now it's no longer. Japan is not rising. What country is rising? It turned to be China. But China in growth, yes, complement to Thailand in many respects, but also competing as well, right? In terms of production. So it's not the same, right? That's the capital side. The labor side or the human capital side is similar to what Gita said, right? The quantity of labor doesn't look good, right? Because aging is a big thing. Demographic change in Thailand is huge, right? It's very rapid. It's decline in fertility is one of the fastest in the world. If you think about income level, right? Fertility drop incomparable to what's dropped in China without the one-child policy, right? So that's how severe it is. So that's the quantity of labor is going to go down in terms of labor force. The quality is not as good either, similar to what Gita mentioned. So basically both quantity and quality doesn't have that good trajectory. So when you remove capital accumulation, like investment, and you remove like labor right now, which is a big problem, but productivity is not going up. So that's the problem that Thailand faces right now. So this kind of like gloomy if you try to think this way. But I think it's good to identify where the problem is before we think about what's next.
That was such a brilliant answer. I'm going to ask you an even harder question as a follow-up. So I would agree that actually declining labor productivity is the key. And I think it started and was the main trigger in Thailand during the financial crisis. If you look at the trade figures, 1 or 2 years before, and you look at the reverse of the terms of trade, they're basically pricing themselves out of the market. And they're not going up the value chain, and you can only go up the value chain if you're more productive. So I think that the data, as you said, perhaps for several decades, have been going that way. And like Indonesia, I don't think there's a shortage of capital in Thailand. I know many firms are investing in Cambodia, Vietnam, and so on because they can get a higher return. So the difficult question is, if the key is to increase productivity, how do you do it?
That's always the key question, right? So always like productivity is not going to be something that you can change overnight, right? So there are a lot of ways that you can increase productivity, but I think the best way to do is to create incentive in the economy so that people like labor and entrepreneur, investor, make their investment both in human capital and physical capital in the most efficient way, right? And right now, the problem that Thailand has right now and have had for quite a long time is the lack of competition, right, in the corporate sector. And probably Meg can share with that as well. Not in the case of Thailand, but basically it's the same story, right, that we see in East Asia in general. In the Thai economy, usually when you see it, it's kind of like the corporate Thailand is divided into two sides, right? On one side, you see the story of the corporate Thailand that export a lot. Thailand has been export-oriented country, export growth, export to GDP ratio, whatever number that you get, always high compared to other countries in the world. Like, on the other hand, you have domestic sector that is very, very monopolized by like some certain like business, right? Like business tycoon, business family that occupy that domestic sector. So you have these two, and this is of course the detail is going to be more mixed up than this, but let me give you a like simplified version that you have domestic sector dominated by domestic business conglomerate, and that sector is not competitive, is monopoly, is oligopoly. There are a lot of cooptation with politics, politicians, and so on. Basically, that's the sector that you don't see the competition, right? And then you have the export sector that export a lot, competing in the world in many sectors, in many commodities. Thailand compete quite well, but a lot of those sectors are also from foreign firms. So you have this kind of like two story that domestic sector dominated by domestic entrepreneurs and dominated by domestic conglomerate. And the export sector, of course, is going to be driven by multinational corporations a lot. Yes, there's some domestic firm export as well, but it's kind of like two issues, right? So firms that export, then they compete. So when we talk about increased productivity, right? How to increase productivity? Basically, we have to break the cartel. We have to break the market power in domestic sector so that you allow entrepreneur to thrive, like people who can who have idea, who can produce more efficiently, right? And I think that's the important thing. And I think like if I have to pick one policy to reorganize the domestic sector in Thailand right now, is probably the policy on competition and antitrust, and that one would be the starting point.
Would you also agree, similar to Indonesia, that there needs to be a serious upgrading of the human capital investment in human capital?
I think that's of course, like I agree, right? But I think that one the problem is a little bit different. I think the problem of education policy or training policy is not it's about like how to do it good, how to do it well, and they kind of like fail to implement that. Thailand has introduced I don't know how many education reforms in the past 20 years, 30 years. Every time it's reform, it's getting more and more complicated, and I'm not saying that they don't have good incentive to do that. I think policymakers have good incentive to do that, but it doesn't deliver into the outcome that they expect, right? But I think that's a different issue from the one that the incentive in the economy is perverse.
Yeah, the need to introduce competition,
Yeah.
Reduce protection, and so on, and then perhaps increased labor skills could take advantage of this as the requirements and the jobs change.
I think one of the big issue right now that at least we identify that issue is that the education training doesn't match with the job market demand, right? The supply of labor that we produce, they know general knowledge, but they don't know how to apply that to the work. So that mismatch of the labor skill, I think that's the problem, and people kind of know that. But I think it has to solve not only the education policy, but the mindset of the people as well. We are somehow, over the past several decades in Thailand, there's a mindset that going to college, going to university, getting general education is more prestige than going to vocational school, right? Even though at the end you graduate and you get knowledge, it is more general and not quite applied to some of the job, but vocational school might get you something that is more applicable.
Thank you, and we're going to shift gears a little bit as we move to Meg, and we've been looking at two countries in detail with some similarities, some differences, and if we include the Philippines, it would have many similarities with aspects of Indonesia and aspects of Thailand. But Meg has recently done some very interesting research on ASEAN perspectives, ASEAN perceptions by citizens of its member nations. And so if you would share some of the kind of surprising and almost counterintuitive findings from this research as we start to look at the 10 nations as an economic entity and how they might benefit from better synergies among the member nations.
Thanks. And I'm certainly not capable of riffing on the sources of stagnation and growth in these economies like my co-panelists, but I have something to show you. So basically, with gratitude to the Asia Center, the data I'm about to show you, which we have replicated for also Latin America, the Middle East surveys in the field right now, as well, and we didn't include Europe, but just Southeast Asia. And so I'm grateful for the funding there, and I have many co-investigators on this project who I will not mention, but people across the university in the economics department, the government department, the Kennedy School, et cetera. But we noticed several years ago when people think about regions and regional commitments, they frequently ask things like, how much do you feel Southeast Asian versus Filipino or something? And we kind of think that is not necessarily the right question. The right question is, how much is your worldview regional? Or how much do you approve, right, of deepening regional commitments regardless of your identity? It doesn't have to be that you identify as Southeast Asian to care. So we asked a series of questions. I'm only just going to show you a little bit of this because I didn't want to overwhelm with data, but I find the results for Southeast Asia extremely surprising. And these data are from 2022, 2023 over the winter. So we asked, it was 500 people from all of these countries except for 1,000 respondents from Indonesia and the Philippines. This is a population representative survey that was computer assisted telephone, not online. Again, population representative. So the first question I have 4 to show you. ASEAN should be more involved in the internal affairs of member states. This was a very surprising level of agreement with that question. The second question was ASEAN should create and maintain its own regional peacekeeping force. Extremely high levels of popular support for that. Harmonized standards and trade across borders. Overwhelming support from all 5 of the countries that we surveyed. And lastly, regulate migration across borders within the region was equally high. So, I mean, I think it goes without saying, if you were to ask Europeans who actually have a supranational structure that does impose all of those kinds of regulations, you would not find this level of popular agreement, and perhaps not even within this United States of America at this point, that the federal government ought to do things like this. And so I found this so surprising that, we actually kind of, re-graphed the data several times to make sure we hadn't made any mistakes. We did not. And I'm not showing you these figures right now, but also we asked a bunch of questions about, in general, to try and calibrate a standard battery of questions to try to calibrate the internationalism of people, right? So should there be kind of global free trade, et cetera? We also found a wide level of commitment within Southeast Asia for those things, which is, again, against the tide of where things are going in the developed world. And so I wanted to show that data and then make a couple of points about it more broadly about the region, which have to do basically with the tide of globalization at the moment, which is very clearly, as we sit, turning against free trade and open investment across borders, but also the geopolitical point. And so first, I'm very fond of what's called an elephant graph. I won't show it here, but many people have probably seen it, which is income gains. The economists for sure know this, but it's income gains based on your global percentile and the global distribution of income. And you find that it looks like an elephant, right? Because people at the low end all the way until the kind of the 50% point experienced tremendous gains from the early 1980s to the early 2000s in terms of their income. And then the graph dips well below, such to go below zero for the upper middle class of the globe. They're worse off, actually, in the early 2000s than they were based on per capita income and purchasing power parity than they were in the late 1980s. And then, of course, the 1% continues to do very well. So it goes way back up at the very end. But what's interesting about that is who are those groups of people? And very clearly that wide, the gainers, right, from globalization were growing middle classes, mostly in East Asia, but also very much in Southeast Asia. And when you ask people, you think about, globalization and what it's given people. It's given them a lot of consumer choice. It's given them exposure to different kinds of things. And the way in which people in Southeast Asia in particular have participated in globalization is qualitatively so different, right, from how people in the developed world do, right? So when you look at actual movement across borders, right, obviously in countries like the Philippines, 10% of the workforce is outside of the borders and has experience living, working, right, in other countries across Southeast and East Asia, as well as across the world. People are experiencing it in terms of their own, social mobility, labor mobility. They're experiencing greater consumer choice, whereas what most of people in the developed world, in the middle class, we experienced as cheaper things that we weren't quite understanding where those things came from. And more limited sets of choices within the job market. And so this kind of broad-based acceptance and embrace of globalization, I think, is very interesting in Southeast Asia. And the ability, right, of ASEAN and countries within ASEAN to kind of combine their markets in a way that might be, I think, a real opportunity for economic growth in another generation. And the second point is really geopolitical, right? Which is like, and I told you that these data were these surveys went into the field in the December 2022 through January 2023. My sense is if we were to field this again at the moment, it might be an even higher level of commitment given the unreliability of the United States as a provider of global security and global rules. Not that it's always been a reliable provider, but certainly it's been more reliable than it has been in the last few weeks. And so in any case, right, but you see these countries very much squeezed between US-China competition and, China's preferences, which I'm very capable of riffing on, are very much to negotiate with countries on a bilateral basis because it's always going to be the larger country. And obviously ASEAN, members of ASEAN and Southeast Asian countries in general are no stranger to that, right? And so this geopolitical moment, right, allows them, I think, right, the preference for negotiating as ASEAN or creating a more singular market, right, would obviously give those countries heft in negotiating with China, as well as benefiting from the current geopolitical moment, right? So Chris was talking about the ways in which Thai policymakers benefited from the Cold War or the rise and shift of Japan. You could tell a similar story, actually, right now, which is that you have a lot of American companies, of global companies, right? And this is what my new research is on even after this, looking for alternatives to China or ways to weather the current trade conflict. And the big story is that they're all going to Vietnam, or maybe they're all going to Indonesia. Now they're not going to Indonesia, now they're going to Vietnam. And they are, in fact, diversifying. I mean, as a heuristic, I was doing this totally unsystematic short survey of Taiwanese business people businessmen, frankly, when I was there to observe the election. And, I would say, where have you been in the last year? And they're like, oh, I'm on the plane all the time. I have to go to Mexico. I have to go to Vietnam. I have to go to India. I used to just have to go to Fujian, right? And so it's a very different world, right? For even Asian, I think, senders of capital, exporters of capital. And, I had one company say in a recent, interview that I did about a scale manufacturer, right, who is very price sensitive, who says, with the tariffs, and this was even before Trump's electoral win, right, we were going to have to get out of China. And we've explored going everywhere. We will go everywhere. But as a scale manufacturer, we need to co-locate R&D. We like to be close to our markets. And the three biggest problems, right, within sending that capital to a place like Indonesia is the lack of market integration, right? So even within Indonesia, right, customers in, different parts of Indonesia are not consuming in a kind of market integrated way, that the innovation ecosystem isn't there. The most interesting and colorful thing I heard about that is, someone saying, look, Vietnam may be able to replicate the Pearl River Delta or just the Yangtze River Delta in terms of the innovation ecosystem of China, but that's about it, right? And so when you think then about opportunities such as the Indo-Pacific Economic Framework of agglomerating those economies, reducing tariff and non-tariff barriers to, intermediary, primary, and finished goods going across borders, harmonizing payments and standards and those kinds of things, that could really create that agglomeration that could rival China's innovation ecosystem. And lastly, right, as a point of frustration is also rule of law, right? And it's one thing to accept rule of law deficits in a country like China, where the promise, false as it might have been, was 1.4 billion customers, right? But if it's, and none of these countries are small, right? And when you think about, small countries, Singapore is small, Philippines is not small, right? Vietnam is not small, Indonesia is by no means small, and those are markets that are worth it, but they might have to offer more in terms of rule of law to make up for some of the other deficits that my co-panelists have been talking about. And so I thought I would share that data as a provocation to think about a different supranational opportunity for growth and integration in Southeast Asia.
Thank you. I have two observations and a follow-up question. So the first, when you're talking about was globalization good or bad, when I would ask my students if they happen to come from Asia and open economies, right, all for it. Yeah. Students from Africa, Latin America, it was the worst thing ever, right? So again, it's kind of consistent with some of the findings. The second observation is I've often asked ASEAN members, will you be the China plus one? So you talk about the benefits of agglomeration and economies of scale and so on. At the same time, there's internal competition over that pool of FDI that's maybe not leaving China, but it's not increasing. So it's the marginal additions, and so you've got both the opportunities of working together and the competition. So my question is, when you told me these results, I said, really? And you check, right? And we've checked the methodology, it's all good, So the question is, this seems to be so different from current policies of governments. So you've got a little bit of cognitive dissonance here, where this is pretty clear, but it's very different from the policy. So how would you suggest trying to reconcile these voices with official policies?
I think Chris has got the right idea, which is that who stands to lose, right? Especially within, if you have market integration within even ASEAN, right? And when you said, about Africa, right? So there we have the African Continental Free Trade Agreement, where there's a common external tariff, and then the idea is that within the continent, there's a tariff-free, right, which is remarkable, actually. If it's implemented and if it's achieved in that way. And so So, nothing would stop market. So when you're thinking about, where's the competition coming from, right? That's different from what are the possibilities there. And I think Chris is telling the right story, which is that it's, I think there are political elites in these different countries that may want these things and popular desire for these things, but the business class, right, in different places, which has basically controlled monopolies on different parts of these things, from which they, I don't think they stand to feel competitive, even if, Indonesian business groups are having to compete seriously with Filipino business groups, et cetera. And so there's a bit of a cartelization, I would say, of the of domestic kind of business elites within Southeast Asia, and not a lot of energy for those things. And so, if there is an appetite, basically, and there, I think all of that could be in flux, basically, given the severity of geopolitical risks and threats to the region at this point. And so if there's real concerns about conflict in the South China Sea, real concerns, or the North Atlantic, I don't know, right? But if there's real concerns about conflict around the world and what it might mean, then there may be a kind of shock to the system that asks ASEAN to get it together, in the same way that the shock to Europe has been in the security realm, right? You can imagine a kind of world of anything's possible. But I would point my finger at the domestic business class in most of these countries, actually. That's my hypothesis.
Well, this was also raised in the previous comments in a slightly different context.
Yeah.
So if we could build on Meg's response, so I have the same or similar follow-up question for each of you, maybe starting with Gita. How might Indonesia's ASEAN neighbors constrain or contribute to Indonesia's economic development, and the same thing for Thailand?
Just to pick up on what Meg and Chris would have alluded to, going back to my earlier experience as a public servant, one of the larger criticisms with regards to trade would have been the intra-trade, right? In the context of a $4 trillion collective GDP for ASEAN or Southeast Asia, the intra-trade is still well below $1 trillion. Yeah. And I think, to be fair to every member of ASEAN, there's a bunch of stuff that's not in complementarity with each other. Right? Big example is palm oil. Indonesia produces palm oil, Malaysia produces palm oil. We can't go to Malaysia and tell the guys, stop producing palm oil. We'll provide you with palm oil. Or they can't tell us to stop producing palm oil. There's a lot of that. And entrepreneurially, if you talk to the oligarchical forces, they're pretty sticky with their home market. There's no significant interest in regionalizing. Yeah. And I'm quite thickly involved in trying to encourage entrepreneurs from one zip code to go to the other zip code for regionalization purposes. And you talk to any Filipino or any Indonesian entrepreneur, large entrepreneur, they're very comfortable with 280 million people. Why should I go? But if you talk to a Singaporean, they would have to go overseas because they only got a market of 6 million people. So I think those are the two structural reasons as to why, these charts are being shown, and there's not a whole lot of progress with respect to the intra-trade figure. I think that relative number vis-a-vis the overall nominal GDP will be pretty sticky for the next 10 years. And it all depends on time scale, right? If you're a geologist, you think in terms of 100 million years. I think everything will even out in 100 million years. But if you're not a geologist, you only care about what happens next year, well, it's not going to change. But going back to your question, Jay, will there be anything that's going to disrupt whatever Indonesia does or embellish whatever Indonesia does? I do believe that there's some element of every other economy in Southeast Asia to be able to Singaporeanize itself better. That's a positive, value additive component, I think, of the overall ASEAN or Southeast Asian equation. We have learned in the last 2,000 years to embrace the culture of pragmatism. rub shoulders in a good way with each other. I earn $85,000. You, Cambodian, earn $2,000. We meet 100 times a year. I respect you. You respect me. So we don't beat up each other. And this is empirically manifested in the fact that there's no more than 9 million lives lost in the last 2,000 years by way of differences of views or opinions with respect to sovereignty, ethnicity, religion, or race. Whereas the Europeans have killed each other, 190 million lives lost over the same duration. So that's what I call the culture of pragmatism. What the Singaporeans have been able to differentiate it themselves from the others with is what I call the culture of principles. The culture of principles of putting food on the table, medicating the people better, teaching the people not to throw garbage recklessly, right? That's what I call public goods. And I do believe that the Singaporeans, they have infused perfectionism, superlatives in day-to-day conversations as part of their thick culture. And this is what I think the other Southeast Asians need to cultivate a lot more richly on. Now that's, I think, what could embellish what Indonesia is trying to do. What could disrupt Indonesia in terms of it's trying to attain an 8% growth, I think it's much more of an externality beyond Southeast Asia, right? I don't know what's going to happen if Trump were to sit down with Xi Jinping on a 4-eye basis and he goes, dude, I'm going to take over Panama, Canada, and Greenland. And all Xi Jinping has to say is, I've got no opinion on it. And he'll say, how about Taiwan? Right? So that, I think, could complicate the conversations to the extent that it may send the signals of hegemonic tendencies, which I don't quite believe that China is hegemonic just by way of the 2000 history. Yes, there have been aberrations in the 13th century and partly in the 12th century, but the 13th century aberration would have been under the Yuan dynasty. That was an aberration. It was ruled by the Mongols. But beyond and before, I think there's some degree of vassalage, but I think it's mostly economic, much less militaristic. So if anything that could disrupt the trajectory of Indonesia's economic development, I think it would be much more exogenous as opposed to endogenous within Southeast Asia.
I mean, you actually predicted the next question, which was how the Trump administration might affect the analysis. So over to you. So you've got the two questions now.
Okay.
One is the ASEAN question, and then how the Trump administration might affect the previous analysis.
I think the ASEAN question is quite interesting, right? Because ASEAN itself, I think it's interesting because it has been around for quite a while, but people say that it's dysfunctional to some extent, right? You have a lot of countries grouped together. One of the things that have been successful is the ASEAN free trade area after. But even that, like, trade volume went up. But as Gita said, it could have been better. But on the other hand, it's a group of free trade agreement, a group of countries with free trade agreement, but they're producing something that overlap with each other quite a lot. But that being said, I think what is, and I agree with Gita, they could have done better. And why is that? Because the market are very big. But somehow, I haven't proved it in terms of research, but I think I agree with you completely that people don't look at investment or market outside their country as much, or within ASEAN, right? In Thailand, I think average Thai people or business people in Thailand probably they know about the EU, about the US, about China, about Korea, more than Indonesia, even though Indonesia within the same free trade area, the market is much larger in terms of population, head count, but they just don't go there. And I think there's something, I don't know how to explain that the trade in among ASEAN countries could have been higher, and we haven't exploited that much, right? So I think that's one of the potential right? The second one on the ASEAN itself, I'm back to what ASEAN, right? And I think there's a couple of like diplomats that I talk to, they keep saying that the weakness of ASEAN is the strength of ASEAN. Right, the fact that ASEAN is not strong, is not going to become a hegemonic superpower. Basically, that allow other superpowers, both within the region and outside the region, allow ASEAN to take lead. That's why we see ASEAN as centrality, as a central node in international relations, right? Like Dan talked about centrality in the morning as well. This is another dimension in that one. We have ASEAN +1, ASEAN +3, ASEAN +6, and all those things. And it's around ASEAN, right? And the fact that other countries that have more power than ASEAN allow ASEAN to lead this, because ASEAN itself is not that strong and is not a threat. So having ASEAN have its own like military force or those kind of things, that might undermine this role of ASEAN. So that this like pro and con going that route as well. The last thing about ASEAN that I think is going to be a potential is looking west. In the morning, we talk about Indian Ocean, right? And I think that's quite interesting because in the past, when we think about the Asian economic landscape, it's all about East Asia and Southeast Asia. But right now, population in East Asia is actually going down, right? Like Japan, China, Korea, including some countries in Southeast Asia, going down. India and Africa is going up. Basically, that's the potential in the future, and basically that's the way that the world is shifting that way, and ASEAN is right in the middle of that. Okay. Your second question, right? The Trump.
Mr. Trump, yes.
Right. So that one, I think the answer for me is going to be quite simple, right? There's not much we can do, right? Many countries in Southeast Asia run trade surplus with the US, and basically that's kind of like target.
Except for Singapore. You're smart.
But on the other hand, the negotiation power is not that strong, right? We cannot retaliate the US because we just cannot, right? The size is much smaller, right? And if the US say like increase tariff for say like Thailand, right? We cannot do that back to the US. That's big trading partner with Thailand. And the worst thing is that we cannot do that with the country that we run trade deficit either, because that's China, right? So if you like do something, then China say, okay, we do the same, then that's not, right? So it's kind of like in the middle. So I think like how to navigate this basically is the ASEAN way that ASEAN has survived in the past is more on the soft skill that I think ASEAN has been doing quite well, and the more concrete side is going to be diversify away from this market. That's more in the long term.
Yeah, your observation about lack of interest in the regional markets, I also see that in scholarship education, higher education. Thai universities, nobody's interested really in doing research on Southeast Asia or neighboring countries. And tourism. I mean, when I was living in Indonesia, I tried so hard to get my Thai friends to visit. Now I'm going to go to Europe, go to Australia. So again, there's a similar pattern. It's not rigorously backed by data, but it's observational, anecdotal. But I think it's consistent with a lot of your observations in the economic sphere. Meg, you being an expert on China, as well as having worked in Southeast Asia, I'm going to ask you the last question before we open it up, which is the Trump potential impact.
Oh, I thought I was going to go get a question.
No, you're not going to get off.
Yeah, I mean, I think that I agree with what Chris just said, and mostly what Gita just said, which is that it's the exogenous unknown, right, and what will happen with conflict and peace and war in the region. I mean, I don't see China as having ambitions beyond Taiwan. in terms of its, and I think a lot of what it is doing, say with the second Thomas Shoal and with the Philippines, is really about testing some of its ideas about Taiwan and showing some resolve. I mean, up until recently, the formal opinion of the U.S. Department of Defense, maybe it still is, I don't know, is that an invasion of Taiwan is neither inevitable nor imminent. And I will tell you, in classic not answering your question, but answering a question I wanted to answer way, I don't think there's any reason for Xi Jinping to invade Taiwan in the next 2 years. I don't see why he would do that, and I don't think he needs to. I do think it's likely, and there's a bunch of chatter around that I'm paying a lot of attention to about not just a deal over Taiwan and whatever territorial ambitions the United States has, but also basically the potential for a grand bargain with China. And so what's interesting, Chris mentioned the resolution of trade friction with Japan in the 1980s was indeed supranational currency agreements, as well as Japanese FDI into the United States. And that, structurally may be the answer for some of the Chinese distortions, right? Because although a lot of those have to do with China's domestic political economy, which is incredibly difficult to shift, talk about structural stagnation, right? And structural issues, it's very difficult to make some of those shifts. On the other hand, why is that not immediately possible? It's national security reasons and concerns inside the United States, which I can think of one prominent Republican who does not seem to care about those things, and he happens to be the president. And so it seems like, and one who basically, and I don't think he cares about Taiwan much either. And so any kind of, we may get some sort of milquetoast trade deal. You buy more airplanes and soybeans and blah, 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 and that's some kind of like immediate resolution. We may get a long-term structural disintermediation of the Chinese and U.S. economies over time. We may get a grand bargain. And if it's a grand bargain, then it's going to be an implicit promise that it may be even changing formal language within the United States too. The United States does not oppose, or the United States rather opposes the independence of Taiwan, which would basically be an invitation to Xi Jinping. One, I think he'd be foolish to take in the next couple of years. I mean, that we know what the playbook would look like, which is like disinformation, misinformation, buying people off, getting the KMT back in power, and having them basically hand it to China without. I don't see why he would invade. I think an invasion only happens when you are acutely afraid that your window of opportunity is closing. And if the window of opportunity is instead open, then why would you go to that much trouble, especially after what they've seen elsewhere in the world? And so, so what would all that mean? What would be the second and third order effects on economies in Southeast Asia? I mean, Singapore would be in big trouble, actually, and then maybe also have some wins from it. And so, all of that sounds very crass, and I don't know if I want to go in that direction, but it does seem that a lot of it has to do with, and when we think about this Japanese experience again, to go back to that, what did it mean for economies in specifically Malaysia and Thailand, right? When Japan started shifting production overseas, right? It was like how much of the value and skills can be captured by those economies. And I would say both Malaysia and Thailand did a pretty good job with that, right? And you still have, for example, parts of the semiconductor testing supply chain located, pretty entrenched in Malaysia in that way. And so policymakers in ASEAN, nations, at national government level should be thinking about how do they lock in some of the advantages of the flying geese, out of China as it goes in the same potential way. But when it comes to conflict in the South China Seas, and I'll just say as a last thing, part of this research I've been doing on geopolitics, that, as a bit of an ethnography experiment, I've participated in dozens of these tabletop exercises in major international corporations, like Fortune 500 companies, where they do these tabletop exercises, what happens in the event of a blockade or an invasion or some kind of kinetic conflict. And basically, they all realize that their entire supply chain is in trouble, and that there's also no way to make short-term, efficient decisions that aren't incredibly expensive that allows them to be resilient to that. So they're just kind of at the end, they're like, okay, well, let's just hope that doesn't happen. And so, because there's no way we can plan for that without extraordinary waste of resources if that doesn't come to pass. And so there's no one in the world, I think, who has an answer to that question. But in some ways, conflict just became a little bit less likely. But that doesn't mean that the outcomes became somehow lovely in that view.
Thank you.
Sure.
We still have some time, so I'd like to expand our conversation to include some audience participation. So please use one of the microphones on either side so the people watching online can hear you. And just follow 3 very simple rules. Introduce yourself, be brief, end with a question mark. Thank you. Please.
Hello. Hi everyone, very glad to have you here. I'm Tika, originally from Indonesia, right now studying global health in Harvard Medical School. My questions is, beyond offering quote-unquote cheap labor, how can ASEAN leverage the US-China decoupling to upgrade their industrial capabilities and probably move up the value chain? And then how might ASEAN transform from being seen as a production base to becoming an innovation hub, like for example, Silicon Valley of Asia, as a global companies that probably diversify away from China? Thank you.
Thank you. Anybody? Okay, keep.
I'm happy. Meg, okay with you?
I think
Right.
I would say the same thing you're about to say. This is my prediction.
Look,
And Chris is already nodding. So.
I think it's helpful to put this in the context of the total trade. Southeast Asia and China is about $750 billion, right? Which is equivalent to the trade or collective trade between China and the US, right? And if anybody asks me as to whether the train has left the station and whether, this train or that train is going to reach the next station, which one is faster? I think it's the train between China and Southeast Asia that's going to reach the next station faster. That's defined by a threshold of $1 trillion, right? Now, in a context of a de-risking or decoupling, and I'm mindful of rules of origin here, right? And if you're a US multinational company in China, you want to reshore, friendshore, or offshore the pre-existing manufacturing capabilities from China, I would do it to Southeast Asia without having to worry about rules of origin. Because I'm looking at a market of 700 million people, right? And I admit, and we all know this, many of the products that are being sold by the Americans and Europeans in China have sort of like declined in volume by way of competition from the BYDs and all the rest of the world, right? So I think the Chinese, the Americans, Europeans, and ASEANites, they understand. I don't know if that's a term. I just made it up. I think there's very little to be concerned about rules of origin, because most likely these goods and services are not going to be shipped over to the US, right? And even if there is a dent in the trade between Southeast Asia and the US, which is about $520 billion, if let's say that comes down to any level below $520 billion, it's going to be more than made up by the increment that's going to go, above the 750 billion mark between China and Southeast Asia. As a matter of fact, I think the 750 is going to grow at a faster rate than any potential decline from 520, right? This is the layman thinking, right? And if you take a look at the quality of the goods and services that are being produced by the Chinese, it's gotten better. I would urge you to test out the BYD.
We can.
Just test it out. We drive a Tesla here, but we drive the BYDs and the Genesis in Southeast Asia. The digital user experience is much more pronounced. The only thing that's deficient is the AI capability, which I think Tesla has some superiority over. But this is, I think, a manifestation of what the Chinese are capable of. So if, let's say, the multinationals in China and the Chinese companies want to offshore to Southeast Asia, and not having to worry about rules of origin because there's a massive market, right? I think there's no lack of desire to do that, but there's no wherewithal to up the ante on the Southeast Asian side. So the onus is really on us to increase our marginal productivity. I mean, Chris talked about marginal productivity. Thais are about $50,000 per capita per year for goods and services. Indonesia is about $25,000. Singapore is about $200,000. They're on a different planet. But luckily, they don't have acreage, right? Thailand has acreage. Philippines has acreage. Indonesia has acreage. Vietnam has acreage. Do I believe in a perennial story in a good way for Vietnam? Not really. I think it's going to get toppy in the near foreseeable future from a valuation standpoint, right? And I think just take a look at Apple, okay? They made an initial decision to invest only $10 million. And as of a month ago, they changed $1 billion. Because now they realize geopolitically Indonesia, hey, hang on, this is the third largest democracy. This is a 280 million market. Maybe we should invest a little more than $10 million, right? So that I think is a manifestation of a typical MNC that's not worried about rules of origin because they're seeing 280 million people hopefully making up for the declination of demand for iPhone 16s in China. And the Chinese are thinking alike. So I think the onus is on all of us to improve the marginal productivity. To the extent we don't, we're toast.
Chris, Meg?
I think
Okay, you
that's
hit
good.
it.
Yeah.
Okay, sir, please.
Yeah, thank you. I'm Steve Thomas. I have a small consulting business in energy based in Tokyo called Asia Focus. So I'm very bullish on Southeast Asia and very impressed with the potential. I'm not going to ask a question about business. I'm going to ask a question about education because I think it's fundamental. I believe it's fundamental to the issue around productivity gains. In my time in Southeast Asia, I've learned that there's an issue around really families are embracing the Chinese mentality around how important it is to be highly educated. When I went to MIT in the early 80s, the reason I went to MIT is because I had the highest concentration of foreign students, and that was mostly Taiwanese at the time. So is there a place, or is there a way, because this is cultural and I'm not Asian, is there a way to ante the ante in terms of understanding how the Chinese have learned to embrace higher education, to bring up those levels of productivity, either through more of this, more of exchange with China, or leveraging all the things that Japan has done and around training? I don't know, but can you touch on education and productivity and the opportunities?
I'd like to say one quick thing, which is that gender equity and participation in education and the workforce was super critical in China, right? And so you had basically most of the factory workers in the early period in the 80s and 90s were women. And so basically women's technical education and gender equity is really important. So as multinationals are moving to India, they're finding problems, right? And they have to do with gender issues. And so that is like the number one thing I would say people aren't thinking of very much.
Chris?
I think like when you look at education, I think it differs country by country quite a lot, right? Education in Singapore is right now like very, very top notch, right? And in other countries, I think a lot of the governments try to, like put more money and put policy on this one. But what we see is that, of course, the average goes up. But what worries me more, and I'm not sure whether this is answer to your question, but add to more of this issue is the inequality in education. You are from like good family, you get good education and you get top notch. Then you come here to Harvard, MIT, but the majority of people still don't get that, and then they are left behind. And right now it's getting worse and worse. In my opinion, yeah, both like technology make it worse, like, including AI. Yeah.
Well, I've talked about the non-tertiary stuff, right? The tertiary stuff is peculiar. There's about 8,000 universities in Southeast Asia, 4,000 of which is in Indonesia. And there's only 2,500 universities in China. But if you take a look at the number of patents, or call it intellectual property, China, they're on Mars. Southeast Asia, in terms of publications, scientific publications, from an intellectual property standpoint. And this is, I think, the homework for all of us. And I had lunch with the leadership of one of the universities in Singapore. And since you brought up the name MIT, he was basically making the comment, look, MIT has about 100 Nobel laureates. We've just recruited one Nobel laureate to work at our school. He says, we're paying him a large sum. On top of that, he wants a budget of about $20 to $30 million for his lab, which we're giving. And I go, dude, that's crazy. That's a lot of money. We're thinking of recruiting 25 of these. What's going on, man? I go, and he goes, look, MIT has 100. Let's say if we're lucky to be able to organically produce one every year, it's going to take us a century. We don't want to wait for a century. We want to do it shorter. So if we import 25, he's saying 25, one guy or one girl, a Nobel laureate, would teach 300 every year. That's 3,000 in 10 years. Multiply that with 25. I think we may get lucky in producing 100 Nobel laureates in 50 years. This is the thinking of Singapore. So I go, my gosh, this is quite inspirational. Let me tell this story to my Southeast Asian friends, right? How about we gang bust on this, right? And then import. So I think structurally, education is really about the democratization of the mind, right? And this was exemplified by Lee Kuan Yew, who basically said, let's not reinvent the wheel. We can't fix the toilet. Let's get the best toilet fixer from anywhere. And we'll pay her or him. And the other Southeast Asians are too busy reinventing the wheel. And we got to change the paradigm a little bit. And I think if we were to do that, I think we might have a shot at, approaching where the Chinese are.
So how many questions do we have left here? One? Three. Okay, so we're going to be super efficient. We're going to take all three together, try to be brief, and then maybe we can combine them in brief answers. So 3 brief questions.
Thank you very much. My name is Arif. I'm a Fulbright visiting scholar at Weatherhead Center here. I have a question to Pak Gita. Would you please to share your thought on the newly established super holding state-owned enterprises, Danantara, in relation with the economic development in Indonesia specifically and Southeast Asia more broadly? Thank you.
Hello, Richard Yarrow at Harvard Kennedy School. Gita, it's great to see you back at Harvard. Hopefully you move back over here after Stanford.
It's too cold here.
A little bit, only a little. You began your remarks talking about liquidity constraints. Given that, how would you think about the goals, or what should be the goals for the Central Bank of Indonesia over the coming 10 or 20 years?
Repeat the last sentence.
What's that?
Repeat the last sentence again.
What do you think should be the goals or the directions of the Indonesian Central Bank over the next 10 or 20 years? And then for Chris, as someone who just came from several years of working at the Thai Central Bank, there are a number of people in Thailand and political parties in Thailand that have criticized the Thai Central Bank for being at least partly responsible for some of the productivity and monopolization problems that you talked about. Part of that is the interest rate policy. Maybe a bigger part is the overly strict financial regulation. How do you respond to some of those arguments about the central bank being partly to blame for productivity and monopolization and other economic problems? Thank you.
Final word.
Thank you so much for being here. My name is Natasha Lim, and I'm a student at the Harvard Business School, Singaporean. If you could wave a wand and create a hyper-effective ASEAN, what would that look like? And what do we need to believe for that to happen, as well as how feasible is it given the realities of today?
You're talking about ASEAN as the organization?
Yes.
Or okay.
Brief responses. maybe starting with Gita.
Sure. Dhanantara is the name of the new, I hate to use the word wealth, sovereign justice fund or development fund, right? I think it serves the purpose of segregating the role of being an operator and the role of being a regulator, right? That I think is noble. And I've been a critique of this for a long time because it just smells conflict of interest. At the rate that it's being moved from a ministerial function to some sort of a body that's not political in substance, I think that's net positive. Second, the fact that it has an AUM or asset under management allegedly of about $900 billion, I think it's important. For a country that has the third largest democracy, 280 million people, it's important to have a seat at the table when you go to a G20 meeting or when you do a bilateral with some big guy, right? And I do believe that that's the thinking behind Prabowo. And for him to meet up with a big leader, if he can show that he's got a good, lever, he's likely to have a seat at the table. And I think it's important not just for Indonesia, but many members of the Global South. At the rate that many members of the Global South have tried to be a bit more revisionist with respect to the pre-existing order, and they really want to climb up not just the value chain, but they want to climb up the global order by way of expanding upon their pre-existing strategic autonomy. So that, I think, is a net positive attribute. So those two, I think, are probably behind the thinking. And I'm not, reciting whatever he said. Now, with respect to the central bank, we segregated the function of supervision with respect to the banking system and the function of managing inflationary pressure. And now the central bank or Bank Indonesia is primarily or only charged with managing inflationary pressure through the instrument of interest rate. So I think it's going to be a beneficiary of whatever is happening globally. At the rate that there is so much liquidity, particularly in the G7 countries, the meeting point between supply and demand of money is called cost of capital, right? That is inevitably only going to come down. That's going to help everybody else as long as it's judiciously utilized. So it I think, dovetails to the degree to which financial capital allocators are going to be able to allocate or reallocate capital on a risk-adjusted basis in a good way. Now, if that were to happen, I think the role of Bank Indonesia will be preserved in a good way. However, now there's temptation under the current administration to recombine the role of OJK, which is the supervisory body, with Bank Indonesia, because we've kind of figured out that what's happening in the UK is not as good as well as what perhaps the British would have envisioned and we would have envisioned. And honestly, I was still in the government at that time when my former boss thought about segregating the two, was on the back of our belief that the FSA model was the right model.
Okay. So I think I'm going to answer very, very brief because first of all, I cannot say that I agree with everything that the Bank of Thailand has done in the past, and I was not involved in that, so I don't know what's the detail when they make certain decisions as well. But what I can say is that making decision on, say, like monetary policy is quite complicated because you have conflicting objective as well, especially in the case of Bank of Thailand. Supervision, bank stability is also under the same organization as monetary policy. So there's a trade-off when you make this decision, and growth and stability, sometimes they don't go together. Sometimes they go together, sometimes they don't go together, and the choice of policy is quite complicated. Yeah.
Okay. So, alas, all good things must eventually come to an end. So if you would join me in thanking our esteemed panelists for so generally sharing their insights with us. Pak Gita, Ajahn Chris, and Prof. Meg. Thank you very much.